Is the microphone out?
Yeah. Yeah, it's sitting there. Right there. Should work. It's pretty sensitive, actually. Okay, come on. Go to one page. All right, good. Okay, there's an inventory one. Boy, would it be a good idea to work these problems before you do the next quiz. There's an allowance, doubtful accounts one, sort of like what the example that we did in class. It's very similar. Okay, and then let's see. There's a inventory error. Okay, and then there's just computing net income with a few different things. Do I have an extraordinary item on there? No, I guess not. That's good. We have changed the accounting principle though and discontinued operations. That's in chapter 5. And this is some stuff on sales discounts and that sort of thing. Look at that. Here's what I wanted to do for sure today though. Let's do a bank reconciliation. Okay. Mentioned that last time. And so what it is just prepare a bank reconciliation. This is the quiz that's out there, right? The practice quiz. Anyway, so what we got is prepare bank reconciliation and then prepare all the adjusted journal entries. I gotta ask you this question. Do you make journal entries on the bank's books or on your own books? What did you call the Republic Bank? He said, oh, I think you have a mistake in your general ledger. I think on my account, I think you should make a journal entry. They would think that you were insane because you probably are. They probably don't have a mistake. You just don't know how to do a bank reconciliation. You don't call up the bank and tell them they made a mistake. It doesn't start well that way. You call them up and say, I can't figure it out because that's probably what the case is. I do, though. I've seen banks make mistakes for a while. It's happened. Um, it's rare, real rare. But I've seen them put somebody's money in somebody else's account, that kind of thing, by mistake, right? If it's the wrong account number or a check is drawn on the wrong account. There are mistakes, right? They rarely make mistakes. Why? What do they do at banks? They take money in and pay money out, right? What does Yum Brands do? Well, they do that, but then all kinds of other things, right? You know, Yum Brands is probably better at, making fast food, poisoning people with it, stuff, right? We know bad things, right? So you're bad. Okay, so Yum Brands is just like McDonald's on that. Pretty much. Great company though. They hire a lot of people from Belgium, lots of interns, so we didn't want to put them down or anything, right? So, you know what? I think if consumers want to buy things that are really bad for them, they should have the right to do that. Right? There's a book called Tobacco Wars that you should read sometime. It's an old book. And it argues that it is less costly for society to have tobacco than not have tobacco. Because people pay a whole bunch in while they're working, killing themselves smoking cigarettes, right? While they're working, they pay a whole bunch of taxes in. We build up all these funds, right? And then they conveniently die early. And it's sort of expensive to have them die, right? Because they poison themselves with tobacco, right? Kind of hard on them when they're dying and all that. But in the long term, it saves society a lot of money. It's kind of like, you pay into the system and you voluntarily leave the money for everybody else. It's kind of nice. So next time you're around a smoker, you should thank them for, contributing to your retirement, by checking out early. Yeah, anyway. And besides that, I can't make too much fun of tobacco addicts because alcohol kills you too. And so does fatty foods, right? We're killing ourselves on purpose, right? We're doing it, and we've got the right to do that. I believe in assisted suicide. I guess I even believe that people, if they really want to, can do it personally, right? I don't encourage any of you to do that. However, you do know that's how young people die. Right? What is it? The second leading cause of death among young people is suicide. The first among young people is automobile accidents. Is that right? Yeah, I think it is. I think that's the first, and still suicide second. But you are going to know people while you're going to college, by the way, who commit suicide. It's just really sad. A friend of mine who is she's in her, I don't know, 50s, I think. I don't know what, but anyway, she's in her 50s somewhere. Her daughter just committed suicide. Right? Just sudden. And she's the daughter of a little girl. Depression is a strange thing. So, don't get depressed and then get off by yourself or because you're doing get depressed. Right? Don't do that. You'll be talking about that in your freshman focus class, by the way. Every year we lose a couple of kids to suicide. Big enough place for that. Right? Nationwide, there's all kinds of suicide. So don't be a victim of that. And by the way, when it's happening to you, you don't know it's happening to you, right? So if it's happening to a friend of yours, a roommate of yours or something, they're withdrawing, you know, disappearing, falling apart, you know, uh, make sure you take some sort of action, right? Intervene, and that can a lot of times stop it, a lot of times prevent it. It's not rational behavior, obviously. Okay, anyway, boy, that's depressing, but not really. We need to talk about it. We had that out in the open. I thought it was really neat. My friend put out on Facebook what happened to her dog. Why hide it? Why pretend it doesn't happen, right? Illness, right? So, okay, anyway, really sad. All right, how did I get from killing yourselves with alcohol? Yeah, go back to that. Just kind of goes in the same category almost. Okay, so we do gotta, if you're doing business with the bank, which you will be, right? You got money in the bank, it's your money, not theirs. By the way, everybody thinks, anybody ever work in a bank in here? Yeah, okay. People think bank accounting and the rest of this accounting is the exact opposite of each other, it's different. It's really exactly the same thing. The bank is not keeping track of an asset. Your cash in the bank is not an asset of theirs. It's a liability of theirs. They owe you money. So when the bank credits your account, when you put money in there, everybody says, well, why don't they debit the account? Because it's not their money. They credit payable to you. Your deposit, right, is a payable to you. Got it? So then when you withdraw money, what do? They reduce the liability. With a what? Debit. So of course they debit your account. What's really confusing though is credit cards and debit cards. Whose account does the debit card debit? Actually, the debit card's correct, and so is the credit card. Because what's the debit card? Just depending on how you look at it. What's the debit card? It's reducing your cash balance, all right? It's reducing what they owe you when you use your debit card, taking money out. What does a credit card do? It increases your liability. So that's doing your accounting. A credit card is doing your accounting, and a debit card is doing their accounting. They just need you cool names to call them, guys. That's all that is. But that's what it is, right? So it looks really screwy, right? Either way, you're giving up money, right? Use a debit card or a credit card. You're giving up money. Okay, anyway. So what we got here is they tell you what the balance was last month, right? 10/7/40/93, and then they tell you what all the checks are, and what all the cash receipts are, right? And that, I guess, is in your check register probably, and in your cash receipts journal, right? You'll have places where you keep track of all this stuff. And it's similar to the general ledger, only more detailed. Got it? So it represents all, what are checks? Debits or credits or cash? You wrote a check. Come on, what is that? You took cash out, didn't you? Credit cash. So those are all credits to cash. What's a cash receipt? Of course, you put money in the bank. It's a debit cash. For you, right? That's what you're doing. Those are the debits and the credits. Okay, and then this little piece of paper here, I guess it's supposed to be, this represents bank statement. So you get the bank statement probably electronically nowadays, right? But you still get them printed sometimes. Okay, so on the bank statement, they show what the balance was at the end of last month. All your deposits, all your withdrawals, right? The checks and debits, right? Checks are debits, right? For them. Okay, checks are reducing what they owe you. Okay, and then the ending balance. But this is for the bank statement, and then here's the detail of it. When the check's cleared, right, and those would add up to the total of the checks. That makes sense. And all the deposits are in there too, somewhere, right? There's deposits over here. Okay, checks over here. And then they've got an NSF check. What does that mean? It bounced, non-sufficient funds. So what happened was you got a check from one of your customers, probably. Somebody, excuse me, that was about gone too. You get a check from somebody you think is good. You stamp on the back of it for deposit only, which is what you always do, right? Because once you stamp on the back for deposit only, it can't be deposited in anybody's account but yours. So now all of a sudden the check's worthless. Until you do that, somebody could endorse it conceivably, right, and cash it, right? It can be you. Once you put for deposit only on there, they can take it to the bank if they want, but the bank's only going to put it in your account. It wouldn't do them any good to steal it anymore. So immediately when it comes in, right, you probably have your receptionist or whoever is opening the mail, right, the mail room. When they open the mail, they stamp every one of the checks for deposit only, right? And it can't be taken by anybody. So anyway, little internal control thing. So internal control, by the way, is controlling your business. It's not controlling accounting. Of course, you control accounting too, but it's controlling everything you do in your business. You'd like to control all the cash that comes in, all the cash that goes out, recording all the receivables, right? Recording all the sales, recording all the inventory, right? I'd also like to I'd like to control what I buy, what I sell, who I deliver it to, what trucking company I use, who I employ, how I decide to employ them, how I decide to promote somebody. You got the idea? It's running your business. We want to control our entire business. If you're the CEO, would you kind of like to have things under control? Preferably under your control somehow, but if you have 10,000 people working for you, you don't really control what all 10,000 do every day, right? So you set up systems to try to kind of control it, right? It's sort of under control. Okay, that we call that internal control. Okay, and accounting is just a small piece of that. So anyway, yeah. So that's an NSF check. So you know what? If I deposit it and then I add it to my cash account, right? The bank adds it to my cash account. And then what happens? The bank finds out it's bad. They take the money back out of my account. That's what's going on there, right? They also charge me fees typically, right? And then what happens? I try to collect it again, right? And I also try to collect the fees from whoever wrote me the bad check. Now, by the way, it's illegal to write bad checks, right? But do people do it by mistake? Writing a check and there are no funds in your account? Yes, you could have it happen by mistake. What I recommend to you is that you have a bank account where if you were ever to do that, they'll automatically cover it. You just have a line of credit attached to it. When I was single, I had that because I keep track of things very well sometimes. And so, you know, I had like $10,000 they just throw in the account if I ever overdraft, ever overdrew my account. I never did, but if I ever had, they just put the money, right? And toss it, no big deal. They were thrilled to loan me money, right? Charge a fee to put it in there. But then what's the deal? They never would bounce your check because it's automatically covered. So you get yourself set up with that kind of thing. Okay, anyway. Remember, you don't want to keep extra cash in your cash account. You want to keep the balance fairly low. Why? You want to invest it in something that's going to earn for you. You don't want the money sitting there in the bank, right? Doing nothing. They don't pay any interest on checking accounts typically. Or if they do, it's almost nothing, right? Almost. Okay, anyway, so you get it out, get it in the stock market or something if you're not going to use it real soon. Anyway, they got some other things going on here. What's an SC, you suppose? Service charge, yeah. So they took $15. You have to pay the bank fees, right? Okay, these are minuscule little tiny things, not very representative, but fine. It's okay, it works. The 1100, what's that? They say down below that they got, or somewhere, they say what the 1100 is. What is it? It's a credit memo, but what is it? For what? Somewhere in the problem it says. Yeah, and that's a check. Credit memo, there is no receipt including $60 of interest. Okay, so what's that? $1,100 I got, $60 was interest. By the way, these are things I don't know about yet that the bank knows about. The bank knows about the NSF check. I don't know yet, right? Came with the bank statement, okay? I don't know about the service charge yet. I haven't recorded it yet, right? I know it's coming, but I haven't recorded it. And I don't know about credit memo. I might know that's coming too, but I haven't recorded it. So you suppose if you haven't recorded it and it changed the amount of cash you have in the bank, you ought to make a journal entry? Yeah, duh. Okay, so this is just not a big deal. Okay, anyway, so what we mean by a bank reconciliation is we want to go from the balance in the books, adjust from the balance in the books to the balance in the bank, but the bank's not necessarily right and we're not necessarily right. We want to reconcile between the two of them and come up with an adjusted balance that will then agree, okay? There are things we know about that the bank doesn't know about too. I just went through the ones that the bank might know about, and there could be others the bank might know about, right? That we don't know about. But what about things that we know about that the bank doesn't know about? Do we write any checks at the end of the month? You guys do know that if a check doesn't get to the bank by 3 o'clock in the afternoon, it will not be posted that day. Right? It's standard practice. Okay. So what if I write 10,000 checks in the big company? I write 10,000 checks and I put them in the mail at 5 o'clock on the last day of my year. How many of those get to the bank? None of them. 0. They're all outstanding. The bank doesn't know about them. It doesn't mean the bank's wrong with how, and by the way, what do I do in my general ledger if I put them in the mailbox? Right? They're postmarked that day. Right? I get them out that day. What do I do in my general ledger? I'll record a credit to cash, right? Debit up, whatever it is. Assets, liabilities, so whatever I pay. Right? So of course, it's gone, right? Okay? So So it's in the mail, it doesn't clear in time, got the idea? Doesn't clear by the end of the year. So there'll be tons and tons of outstanding checks, okay? Doesn't mean the bank's wrong, they haven't taken it out of my account because they didn't get it yet, right? I took it out of my account because I know about it. How about deposits? Might you have deposits in transit? What we do, remember I said you stamp all those checks for deposit only? You don't carry them to the bank, you mail them to the bank. Typically, well, nowadays it's wire transfer more, right? So if it's wire transfer, they'll get it the same day, right? Well, they'll get it the same day if it's by 3 o'clock. If it's after 3 o'clock, they still won't get it the same day, right? But anyway, so could it be that a couple of your deposits at the end of the year don't make it to the bank? Yeah. Would you have already debited cash, right? And credited receivables or whatever it is, right? Whatever you're receiving the money for, right? Could you debit cash and credit receivables and sales and whatever? Sure. Okay. And it not to the bank yet? Sure. So we'd have to adjust for that. That's it. Okay. So this is going to be simple. Except this problem did one thing that made it hard. And I want you guys to figure out what that is. So what I've got is balance per books. And you can set this up a variety of ways. It's not a financial statement, so it can be whatever you want. Balance per books and balance per bank. Got it? That makes sense. This is a good way to do it. I think it's the way the author does it. And memory serves. What's the balance per bank? That one's pretty easy. What do you think it is? The bank thinks it's what? 10,951.01. 10,951.01. Okay, so it's 10/9/51/01, and what's the date of that? Month of December. It's December 31st, presumably, right? So this is at 12/31. Everybody got it? So we're doing it for 12/31, obviously. Okay, and we do this every month to make sure that we know how much cash we really have, right? It controls for any mistakes we might have made, right? Basically. Right? Make sure we always know how much we've got. Good idea to know how much cash you have. Fun. What do we say it is? 10/9/51/01? All right. So, what is it per book, per bank? Per books. Yeah, they're already getting this problem wrong. You get one thing to do. Did everything else for you. Already getting it wrong. What's the balance? Give me the balance. What's the balance per book?
10,740.
That was a balance per book. That's what everybody does when I give this problem.
8,736.01.
You think it's 8,736.01?
For the year.
Instead of 10,740.93? Why do you think that's true?
Because you have to subtract, or you have to credit checks and then.
Oh, you mean this 10,740.93 is a balance at November 30th? And to get to December 31st, you would have to take all the checks out and add all the deposits? Wow. Brilliant young man today. Unbelievably easy. Cash. If you're an observant person, right? 10,740.93. That's the beginning balance, isn't it? I want the ending balance. This is November 30th, which is also December 1st, of course, a millisecond later. December 31st, right, is what date I want, because that's what my bank statement is. What's my cash receipts, and what's my cash disbursements? So, how'd you get the cash receipts?
Just added them up.
843, 86, 941, 54, and so on, right? Count them up. How much was that?
3,560.98.
Okay, cash disbursements, what'd you do? It's harder, huh, because there's more numbers. That's rough. 372.96, add them all, right? Add all those, add all those. What'd you get?
5,565.96.
Oh. So, you know what? If you had a situation like this, you could take the beginning. You know, I'm pretty good at this. If I know the beginning, and I know what I add, and I know what I subtract, I can get the ending. Brilliant. You can say add and subtract the debits and credits now that you know that they don't really mean add and subtract. In this case, they do, right? Because it's an asset. Liability would be the reverse, wouldn't it? Right? That's all. You didn't know that. So what's the ending balance you said?
8,736.01.
All right. So, what did I fry you on this one? You start trying to reconcile with that balance from a month earlier, you're going to get crazy, right? You carefully pay attention, right? Think what you're doing. When you get into this is going to be easy, right? What happens to us when we do things very easy? We screw them up because we don't pay any attention. We're human beings, right? So we program the computer to do a lot of things. They don't screw up. If it's easy, they don't care. If it's easy or hard, right? They just don't think they care. So, anyway. All right. So now that we've got that, what do I want to do? I want to explain the difference between this one and this one. I want to work until they agree. Okay? That's it. Okay? And then I'll make a journal entry for the difference between the two of them. All right, so what do you got, guys? What kind of things are there that we should put in here? What did we suggest? What do we know about that the bank doesn't know about? What are probably there? Almost always are there. Two things. Deposits and transfers. So the bank needs to add the deposits that we already added them in this number, right? They haven't put them in here yet. Deposits and transfers. Okay? So we'll add those, right? What else do we know about that the bank doesn't know about? We wrote checks, right? Haven't gotten there yet. What's that called? You guys read this chapter? Outstanding checks. Okay? Right. Tell you what, you guys, if you go to sleep on me, the next exam will bite you. It happens to almost everybody in the course of the semester. So people going along, they got their A, and in the last exam, they'll tube their A. Yeah. Or they'll have an A in the second, tube the A. And then they'll say, well, what can I do to recover? I don't know. They just add up points. Huh? I don't know value judgment other than that. Just add up points. You know, so if you pull a 50 on an exam, you pull a 50 on an exam, and all of a sudden you're out of the A's. Right? Okay? Don't do that. Don't let up. And don't do it in any of your classes. Now what's going to happen is all the sophomores here don't. What's going to happen is most of your classes will give you absolutely no feedback for at least half the semester. And you won't have a clue where you're at. And then you'll have a major paper due, which you won't have worked on. Hopefully you will. Your competition won't be because they're not here yet. Freshmen. Right? And they'll be telling you, you need to work on this, you need to work on this, give me a draft, give me a rough draft, do this, do this. And then about halfway through it'll be due. You'll write it in 2 days, you'll get an F, and you'll now be a C student in that class. And there'll be absolutely nothing you can do about it. You're done. Okay? And it's fine. You're adults. Come on. Right? So you're not ready today. Are you? You don't know how to do this bank reconciliation. One guy does. Did you already know before you started working on it, or did you just learn today? Read the chapter. Good. Okay. How many of you read the chapter? Yeah, it's not very unanimous. Not good. Okay. Did you learn it, or just read it? Just feeling quiet today. Yeah, it's sort of half-assed. Don't do that. Don't do that. Don't do that. When you guys get into intermediate accounting, I'm going to walk in thinking you know everything that's in that chapter and make fun of you when you don't. And then I'm going to give you quizzes and exams that have nothing to do with what's in the chapter. You take what's in the chapter and you use it to make decisions. Nobody pays you to regurgitate information. The computer has that, right? You make decisions, okay? That's what leaders do. So, different. You're waiting.
No, I was just
moving stuff.
Sorry.
All right. No, don't be sorry about it. All right. Okay. So let's try and find those. Let's start there. That's fine. I don't care. How would you find deposits and transfers? Yeah, look what's in the bank statement, look what's in your general ledger. Did they get there? Were there any bank outstanding checks from last year? Let's see. What clears? Let's see what clears. Here's the receipts for what? This is in the books, right? 843. Oh, that one's there, but what's this 5,484.38 probably? What's it got to be? It was from last time. That was a deposit in transit last time and it just cleared, okay? All right, so, and there won't be deposits in transit that take more than a month to clear. It's not gonna happen. Okay, so that's fine. And also, you wanna make sure the numbers are the same, so that we didn't record something wrong, right? Because the bank probably records it correctly, we might have made a mistake putting the number in, that's possible. So 941.54, 941.54, 808.58, 808.58, this is too easy. There's one for 967, wow, it didn't get to the bank. There could be more than one, right? But there's one for 967 the bank doesn't know about, and there's only one, so 967. Was it even? Wasn't it? Ta-da, I'm brilliant. Okay, that's it. Okay, then what? Let's do the same thing with the checks. And this time, let's still check. I know down here it says it was correctly written for 708.62. I guess they had to tell you that so you know who made the mistake, right? So it was written for 708.62. So the other thing is I'll put the check numbers on here. So what do you think about check number 14 came in? That was outstanding last time probably, right? Okay, and by the way, we'd have last time bank reconciliation sitting in front of us in real life. So we'd know it was on there, right? Okay, so then what happens? There's one here for 780.62, which is 708.62. Uh-oh. We screwed up, didn't we? It did clear. Number 18 cleared the bank, which means it got to the bank and got paid, right? It cleared the bank. But what's the difference between 708.62 that we recorded and 708.62 that the bank recorded, which is what the check was written for, right? And the mistake we made is 780.62. What's the difference between those two? 72 bucks. What's that divisible by? 9. Every transposition, when you switch numbers around like that, you just switch two numbers, right? Is divisible by 9. So when you're off on anything, totaling up columns and the numbers are supposed to, the two columns are supposed to total the same thing, and they don't, take the difference and divide by 2. Right? I'm sorry, I'll do that too. Take the difference and divide by 9. And you find out if it was a transposition or not. Might be. You find them really quickly then. Okay? Switch numbers, that happens all the time to people. Inputting to computers, it happens all the time too, of course, right? And you don't see it either. Something in our brains, we don't see it when we switch things around like that. Okay, then the other one is divided by 2. Why would you divide by 2? You might show. What if you post a debit as a credit? How much are you off by? Double the amount. Yeah. What if I post a credit as a debit? How much am I off by? Double the amount. Got it? That's it. Okay? So you divide by 2 and you divide by 9 and pray that you find the difference. If not, it's more work, right? That can save you a whole lot of time. Okay? So remember that. It's really useful. Little math trick on divide by 9. Okay, anyway, what are we going to have to do with this one? What's this? I took out of cash 780.62 and I should have only taken out 708.62. So what's that? $72 more cash I have than I think I have? Who's wrong, the bank or me?
You and
Me, yeah. Okay, so here's the error. And it doesn't matter what order you find these things. Check 18, was it? Okay, $72. I'm going to increase cash, which is doing what to cash? Debiting it. I'm going to debit cash. I'm going to increase it, right? And credit something. I have to make a journal entry for it later. What's that credit going to be for? For $72? Yeah.
You would decrease it for books so that it's correctly written.
I took out $708. No, what I did on my books was I took out $780.62. The bank only took out $708.62. So my books are too low. By that, I took too much out. Okay, so if I debit cash, what am I going to credit? Well, I'd have to know what I paid for. Probably what I paid for is payment on, well, it was payment on an account. An account what? I made a payment on an account. Credit cash, debit what? Accounts payable. And I did it for too much. So now I'm going to debit cash and credit what? Accounts payable. Just fix it. Okay. So this one's going to go to accounts payable, and that is really good to know because we are going to use that when we do our journal entry. Everything on this side I'm going to have a journal entry for, of course, because that's my books. On this side, I'm not going to have journal entries, and I'm also not going to call up the bank and tell them they're wrong, because they're not. Right? Stuff's just not there yet. Okay, good. So we did that one. That one cleared. How about 19? Did it make it? Yes, it's 157. How about 20? Did it make it? That 587.50? No. So what's that? That's an outstanding check, you guys. It is, isn't it? And what we do is, because we might have thousands of these, is we'd add them all up and then write it down once, but I'm only gonna have a couple, so I'll write them down, Does that make sense? Okay, so if you have 10,000, it'd be kind of nice to add the whole group together, right? Whatever it is. Whatever ones don't get to the bank, for whatever reason. Okay, so that one didn't get there. Did 21 get there? Yes. Did 22 get there?
No, it is.
Yes, there it is. So I don't know why they're not in order. 23, did it get there?
No.
No, okay, so 23 is 168,750. Got the idea? And big deal. Okay, and then we keep going. 921.30, it got there, did it? Yeah. 25, 246.03 got there. And that was the last one, wasn't it? Usually it's the last couple that don't get there, but okay, fine. That's what didn't get there. Everybody good? Oh, that's pretty good. So what else can we find? Just looking at this, what do you got? We said there was a service charge, right? Bank knows about it, they took it out, we don't know about it yet. What do you think? Should we take it out? Service charge, okay? And that's $15, but that's cash coming out, isn't it? And what is that, everybody? Maybe bank expense? I don't know. Miscellaneous expense, bank service charge expense, I don't care. A little tiny number usually goes to miscellaneous, okay? Small relative to your total expenses. Okay, good. Anyway, so that got that one. What about this 250 NSF here? We put it in our account. The bank put it in the account for them. Our account at the bank. But the bank took it back out. So what should we do? Seeing as the bank's not going to put it back in until the people pay us, right? We have to pick it out, don't we? So we got the NSF check. That's it. Okay. And that, well, how much was it? 250. Take it out. 50. Okay. And what's that going to go to when I make a journal entry? I kind of like to think about it as I go, so that I can come back and rethink everything. What is it? That's just a collection from a customer on account, wasn't it? Even says account receivable. Good for them. Okay, what's the deal?
Credit cash.
It's going to be credit, cash, and debit. Account receivable because they owe us. If I think I'm never going to collect and I'm giving up, what would I debit?
Allowance.
Yes, good man. Allowance for doubtful accounts. That's exactly right. Right, because I found one of the ones that's bad. Okay? Probably I'll put it back in accounts receivable and try to collect it, right? And later, if I give up, what do I do? Debit allowance, credit, accounts receivable. Simple, huh? All ties together. That'll be good. What else we got? Any other thing? Oh, this one. Another one there. 1100. What's that? Credit memo. The bank credited my account. That means they put more in, right? They owe us more. So what do I need to do? They add it to the account. I need to add it. Yeah. Okay. So debit, right? All these things are added on this side. You can tell, right? That's a deposit. And on this side, they're withdrawn. Everybody got the idea? Yeah. All right. So, $1,100 was it? And it's more cash, isn't it? So I'll add that. And what's this? This is a collection on a note plus $60 interest. Tell me what the journal entry is going to be.
Debit cash, 1100.
Debit cash, 1100.
Interest revenues.
Yeah, credit interest revenue for 60. Good man. And credit what? 1,040, I guess, for what? Note receivable. Ta-da! Brilliant. Okay, it's nothing to it. Always is just figure out what happened and record it, huh? Figure out what happened and record it. Just what happened is more complex. Recording it does not. Okay, it's just debits, credits, assets, liabilities, every expense. Do you see anything else over there? I don't either. So what I would do is I would add these up at this point, and I'll call, actually I should leave myself a little room. We're at the journal entry down at the bottom so we can get it all on one page. To the following maybe. Okay, I'll leave a little room for the adjustment journal entry down here, okay? So what we're going to call this thing is the adjusted balance. You like it? And again, it's not a financial statement. You're just doing it to get this reconciliation. So we'll do the same thing over here. And if those two adjusted balances agree, we celebrate, we're done. Okay? So what do you get? Add 873,601 plus 72 less 15 less 250 plus 1100. What does that come up to? And then as soon as you do that, take 10,951 plus 967 less 587.50 less 1687.50.
Right, right side.
So what do you get over here?
No, the bank,
Yeah.
96401.
that's what I got for the left.
4,301. 301. Oh, you got the same thing on the other side?
I did,
Yeah, it's relative. Now, obviously, this is a real simple one. There's not much activity, but it's always the same stuff. There's just more outstanding checks, more deposits in transit, more transactions, maybe number of NSF checks, maybe that. Okay, so more stuff going on. But that's it, huh? So what's the adjusting journal entry going to be? Don't do like the author does. It's silly. I would not make 1, 2, 3, 4 journal entries to adjust cash because I'm lazy. I think the best CPAs are people who are extremely lazy and have a high level of integrity. What does extremely lazy do?
You only do what you gotta do.
You only do what you gotta do. You're working a lot of hours anyway. You're billing people a lot of money for your time. Never do anything that is not necessary, because if you do, you are stealing the amount they pay you. You didn't need to do it, right? But always do everything you need to do, because if you screw somebody up because you didn't do the work you needed to do for them, that's your responsibility too. So you walk this tightrope, right? You need to do everything you need to do and nothing else. Okay? So anytime that you can find an opportunity to be more efficient, do it, right? What does efficient mean? You can do it faster, but you do not want to sacrifice being effective. What does effective mean?
Yeah, right.
Doing a good job. So real fast and right. And man, there's pressure in that. There's pressure in that. And we're constantly trying to do that. What do you do in a CPA firm? If I were a partner, I hired you. Oh my God. Anyway, I hire you to come in. You have to get a haircut. Okay, anyway, you already knew that. All right. I don't care what you do with your hair. The firms aren't going to care either until you go to work for them. Then they'll care. Okay. What's really funny is they're going to look at you, you know, and they're going to, anybody have facial hair in here besides me? You can't have facial hair either. You know, you're not employable. It's stupid. It's silly. Okay. You can't dress like this either. Why not? Does it affect my brain to dress like this? Yeah. Actually, I think I'm sharper when I'm comfortable. No, let's put on a noose around your neck, right? And a jacket that's really uncomfortable, and shoes that click when you walk down the hall so you feel powerful or something. I don't know. It's annoying, right? So you put all this crap on, and it costs a fortune anyway, and then it has to be dry cleaned. This is just dumb. Okay, anyway, but they care. And I think maybe it's just because, you know, everybody has to do it. It's kind of like you have to go to college because everybody has to do it. Probably won't get any benefit out of being here, what the hell, but, you know, you have to do it. You have to, that's a joke, right? You have to have the piece of paper, right? You know, so anyway, some people do college that way. You'll run across those folks a lot. I just need a degree. I don't need to know anything. Oh, really? Yeah, that'll work out good when you go to work. But anyway, yeah, they'll make you cut your hair off. I'm sorry. So, but when they meet you, they'll probably be asking me, is he okay? And he's kind of a dumb shit like all the rest of them. About the same level. You probably should go ahead and look at him, even though he, you know, has long hair. Yeah. Just remember their kids have long hair too. But, well, unless they go to St. X or Trinity, then they don't, right? Yeah. That's funny. No. It's true. It's not funny because it's true. Okay. What's the journal entry to get from here to here? Where I started all that is we are going to do this the easiest way possible. What's the easiest way possible to get from here to here? A whole bunch of debits and credits, or one? Let's do one. I do not want this balance to be 8,736.01. I would really like it to be 9,643.01, right?
Is debit cash?
Yeah, debit cash for the difference. What if you wanted to be less? Try crediting it. Okay? Yeah. Students say, well, how do I know what the journal entry is? Are you kidding me? Right? This netted with that is how much?
$907.
907 even?
Yep.
Ta-da! I'm done with all that. Okay? Except obviously I need the other debits and credits. What's this one? what do we say we wanted to do? It's debit, cash, and credit. Account payable, it's included in that debit to cash. So I'm gonna credit accounts payable. 72 was it?
Yep.
Even I can do this. Okay, what about that one? Yeah, bank expense or service charge expense or something, miscellaneous expense. I'll take any of them. Don't just write down service charge, that means nothing. There's service charge revenue and service charge expense and service charge receivable and service charge payable. Right guys, and prepaid service charges and unearned service charges. What does service charge mean? It has something to do with service charges, right? What does service charge expense mean? Service charges that were your expense. Ah, it means something. Got it? Okay, we'll do that again in a second with some other stuff. Okay, so how much was that? $15 whole? No, a little tiny company here, yes. Okay, what else do we have? Yeah, that went to accounts receivable, okay? Put it up here. Accounts receivable, 250 was it?
Yep.
Ta-da. So now we've done that one, okay, you've done all of those. All I got left is that one. That's gonna be what? Debit cash, it's including that debit to cash, right? Okay, and credit what? Interest revenue is one. How much is that?
$60.
And I hope your report is more legible than mine. Oh well, 1040. Do everything on a computer anyway. What's that gonna be, we said? No. Receivable. Yeah, they owe us some money, guys. Yeah. Ta-da. Journal entry balance? Yes. Good. Everybody happy? So could you do one of these for me? And I promise I'll give you some sort of different twist. Make your life fun. Think, right? The little twist on this one was you didn't know the opening balance of the bank, right? But everybody but one person in here apparently did. Oh well. I guess you did too well on the test, so no need to learn anything new if you did well. Okay, anyway, that's great. I'm glad you did what you All right, gang. Oh, this idea of what does it mean when you write a word down? How do you name accounts? Let's use rent. What does rent mean?
Use something that's not yours.
Okay, I might have used something that is not mine. I rented it from somebody and I used it and I paid for that. Okay, that's rent, isn't it? Or I might be the person renting it to somebody else. That's rent, right? And then I will have earned rent. Okay? So I would like to have, give me all the revenue accounts that might relate to rent, all the expense accounts that might relate to rent, all the assets that might relate to rent, and all of the liabilities that might relate to rent. Write it down. You know what they all are? Think about deferrals and accruals. You got them all. There's accrued rent, there's deferred rent on the expense side, and on the asset, or on the expense side and on the revenue side. ICT class, so says. And I could change rent to interest. I could change rent to utilities. I could change rent to any services that are provided to anybody, right? One's earning revenue, the other has expense, right? All you gotta do is change the word rent. You can name anything. Oh, that's pretty cool. Students say, how do I remember what the names of all those accounts are? I don't, I make them up, of course. What's the difference between salaries and wages? Yeah, wages are hourly, so much per hour, right? Salaries are so much per month or whatever. Okay, so much per year.
We do this, we do some of the periodic extra.
Really?
Yeah.
Yeah, we're starting that today, aren't we? Sure we can. Okay, what is this, guys? What's the name of the revenue account?
Periodic professional.
Yeah, we're talking about periodic versus professional, sure. Because you read that for today, right? Yeah. Some people didn't even read this chapter, much less the next one. Oh well, sorry. When do we have a quiz?
Tuesday.
Next Tuesday. Yeah, it'll be fine. Okay, you got a weekend. What's the name of the revenue account? There's only one. Put rent on it. Rent revenue. Good grief. What's the name of the expense account? Rent expense. It's too easy to believe. Uh-oh. There's two assets. There's two liabilities.
Rent receivable.
Okay, rent receivable. That's an asset, isn't it? That's when I've done what? I have earned rent revenue and not been paid. Right? So I have rent receivable debit, credit rent revenue. Absolutely. Okay, anybody got another one? Prepaid rent. What's that? By the way, the rent receivable is an accrual of the rent. Right? The prepaid rent is a deferral of the rent, isn't it? The accrual of revenue, in the case of the rent receivable, and deferral of expense, in the case of the prepaid, right? You paid for it and didn't use it. Debit, prepaid, credit, cash. And then when you use it, debit, rent expense, and credit. Prepaid. Ah, that's it, right, guys? Should be automatic. Should be automatic. Get there. On liabilities, what do you got? You got rent payable. What does that mean? You used it, you didn't pay for it. What's that? That's an accrual of expense, isn't it? I already taught you guys this. I don't know what's wrong with you. Okay, and then what? Unearned rent revenue. Very good. What's that? Okay. You need to just relax and let it show on the test. You know this shit. Relax. Okay. Can you psych yourself out of doing well on something? He's doing fine, but I mean, you're not doing as good as that just was. Right? Should be. Can you, and several of you in that category. Right? Tell it. There you go. Right? Okay. How do you fix this? And lots of you have less than you. Everybody in here has less points than were possible, right? Yeah. So look at what you didn't do and why. Is it because you didn't know it, because you weren't ready, or because you choked? Get rid of the choke part. One way you can do that is you get more and more and more ready. Sports analogies really work here. If you're really ready, you're more ready than your opposition. I am extremely uncoordinated. Extremely. I can barely run, right? And I couldn't run well. I tried doing track. I could not run well. I wasn't coordinated enough for that. But I wrestled. Wrestling was a great sport for me. You know why? Because I lifted weights twice a day all the way through high school. And I could walk out on the mat and the guy would look at me and give up. And if they didn't give up at that point, I'd grab a hold of their wrist. And then I'd have the ref tell me I had to let go of his wrist when he got on his knees. And they gave up. I had no moves, no nothing. They just quit. Then I went to a community college and I tried wrestling, and they beat the crap out of me because they did not give up. I was stronger than them, but I had no moves. I was too slow, too uncoordinated. I tried, One time I did it. Anybody wrestle in here? We're gonna have a wrestling team now. There are 41 guys in here. Yeah, St. Catherine, and they're pretty good too, I guess. We're gonna be suddenly good at wrestling. Yeah, that'd be cool. Yeah, we've never had it. They're gonna have to add a women's sport. What is it called? Title IX or Title 12, whatever. Title IX. Yeah, we have to add a women's sport because we're adding men's sport. So watch for the women's sport. Yeah, maybe they're bringing money in too. But this will be fun. But yeah, wrestling is a strange sport. You don't necessarily have to be very good. You can be really strong. I also had a lot of endurance. I wish they'd had soccer when I was a kid. I mean, we didn't have soccer. I played football when I was too small. And too uncoordinated. And soccer you have to be coordinated for until the end. And at the end, you don't have to be nearly as coordinated. Why? Because they're all tired and you're not if you're in really good shape. That's how I won in wrestling. I just hang in there and hang in there and hang in there. I'd get them gassed out and then I'd pin them. I'd be behind in points over and over and over and over and then I'd pin them. They just wait. Yeah, it's getting time. He's going to take them out. It's third round. He's going to take them. And I did over and over and over in high school. I was pretty good in high school. I never got that far in college. Yeah, no, I did. I'd go through the entire match. I just couldn't hit them, and I lose by a lot of points. So when I left the team, the coach says I decided to study instead, and I got married really young. But anyway, so it was working. But it's hilarious. I was leaving the team, and the coach says, "Oh my God, you can't quit the team. We need you." And I says, "I never win." And he says, "Keith, you're always good for 2 points." Well, yeah, it's 5 if you forfeit and 3 if you lose. I was good for 2 points. And a couple times we won a match by, 1 or 2 points.
Wow.
So I was a really valuable member of the team. I just didn't realize it. Yeah, it's horrible. Okay, depressing as hell. So anyway, that's it. So you want to do periodic versus perpetual? Sure, why not? Let's do something. Let's not just have fun. And keep, okay, anyway. Well, we could do the one in here, but we don't want to do that. That's actually valuing LIFO, FIFO. Be sure and work on that. For next time, we are going to do a problem very similar to work all these, of course. Some of them you'll have covered in class, some we won't. This one here, you'll really be able to do this stuff. I'm going to give you an example just like this in class, and then we'll work this one in class probably, and then I'll make another one, and then you'll see something in the quiz, test, and final. Very similar. Okay? Can you do LIFO, FIFO, and average? And there are going to be periodic FIFO, perpetual FIFO, periodic LIFO, perpetual LIFO. There's going to be periodic weighted average and perpetual moving average. I want you to be able to do all 6, okay? So it's typical overkill with Richardson, right? But you guys don't know what you're doing when you can do all of this stuff. So perpetual versus periodic, what does that mean? And they're right there. They're part of the LIFO. By the way, FIFO is first in, first out. The first stuff I bought is the first stuff I sell. LIFO is last in, first out. The last stuff I bought is the first stuff I sell. Nobody really does that. We talked about that last time, right? Nobody does that. Okay, not really. It's a tax method that's required for generally accepted accounting principles. Otherwise, you can't do it on your tax return. It does make the income statement better, but it screws up the balance sheet. I'll show you that as we go forward. Okay? So, but anyway, and then we have a way to get around it anyway, right? We do something called a LIFO reserve. And we use LIFO, but it looks on our financial statements kind of like we don't. But we still really do, right? So it's one of those deals. Being a law, bunch of attorneys screwing things up. Okay, writing law. Didn't make sense. Okay, anyway, so what's periodic versus perpetual?
Periodic is when you take inventory at the end of the quarter of the year.
Okay, anytime you want to do a financial statement, periodically you have to count the inventory, right, to do the financial statement. Because you don't keep track how much inventory you have all the time. Periodic is simpler from an accounting standpoint, but it isn't as good at internal control. What do I mean by that? You don't know how much inventory you have. Now, what's perpetual? I perpetually keep track of how much I have. Every time something comes in, I add it to inventory. If something goes out, I take it out of inventory. The journal entries we've been doing so far are perpetual, you guys, not periodic. More companies are perpetual now than periodic. Why?
Because the machine doesn't.
Computers. Yeah, computers. When you go to Kroger and they scan your groceries, or you scan your groceries when you leave, you are updating the inventory records. You're recording the sale, right? It's recording the sale, debit, cash, and credit sales. And it's recording cost of goods sold, debit cost of goods sold, and credit inventory. Got it? It's doing both. And then it's automatically keeping track of when they're going to order and how much they're going to order of each of the products that you're buying. Not kidding. Okay, so all that stuff, we get all that stuff automated, right? What do they do when they bring stuff into the Kroger? Anybody ever worked in a loading dock environment? No. When they bring pallets in, they're on but actually it could be the whole truck, right? It could be the whole truck, but certainly pallets, you can haul them in. There'll be shrink wrap on the pallet, right? So all the boxes sort of stay together is the idea. And there's a barcode on top, either a piece of paper up there or it's actually in the plastic, right? There'll be a barcode. There's a scanner on the ceiling. When they bring the pallet in, it goes under that scanner. It reads what's in there and it debits inventory and it credits accounts payable. Got it? It updates all those inventory records. It keeps track of everything you've got on a perpetual basis. Okay, I sell wheat, kernels of wheat. Do I put a barcode on each one? No. Wheat farmers do not use perpetual inventory. Once it's in a bag, you can, right? Once it's flour in a bag or something, you can, but not the wheat that's in the silo or the wheat that's in the field in a big pile. You ever seen corn growers, and they just put the corn in a big pile? You think there's a barcode on every single one of those ears of corn? I kind of doubt it. Okay, so absolutely not. Got the idea? Okay, so for lots of industries, we still, of course, use periodic. Now, here's the thing. With perpetual, do you need to still count your inventory? it'd be a really good idea, because what tends to happen with inventory? People steal it, people damage it, it disappears. It's funny how, it's like with cash. You work where you're making change, right? You said, right? How many times do you over in your till versus how many times do you under?
Under.
Almost never over, just under. That's because people are thieves, right? You don't just make mistakes giving people too much money, you give them too little too, don't you? Right? But when you give them too little, what do? They say, oh, you didn't give me enough, they want the money. What about when you give them too much? They prove they're a thief and they keep it. For 10 or 15 cents, they'll steal it. Are you kidding me? I used to say I have a price too. It's $100 million in the Bahamas without extradition. But I wouldn't even do it for that. I don't care about money. Come on, don't do it for 15 cents. Don't compromise your integrity.
15 cents, I'm not even going to think about it. They're just going to stick it in my
Oh,
hand.
no, but that's, I was telling you that earlier, wasn't I? I was at the other class. You know, if she's checking me out at the check stand and she gives me too much or too little and I just throw it in my pocket, I figure that just averages out. Because when she makes mistakes, right, sometimes it'll be over, sometimes it's under. So, you know, if I know it's less than $1, I'm getting back.
Yeah.
And it looks like a handful of change, I throw it in my pocket, I go on with my life. Because that's totally immaterial, right? Okay, it's still kind of rude. I probably should really count it, and if it's 10 cents too much, give it to her, right? If it's 10 cents too little, ask for it. So your till comes out right at the end of the day, right?
And they
You want
get
your
mad
till
at
to
you
be
when
right.
you're standing there like,
Yeah, you're just like sitting there.
You're like,
Well, come
They're
on,
like, get out of the
work
line.
on your counting skills. Jeez, you know, you do know, my grandkids know that, you know, that little copper colored one's a penny and, you know, the.
well, yeah, but when they're all
The
like in a
nickel,
pile,
the
it's
nickel,
a
which
little
is
bit more
bigger than the
difficult.
dime,
Yeah.
is worth twice
It's so
as
like
much,
an extra.
driving them crazy. Yeah, you know, but, what's that?
It's like an extra 30 seconds, and then the people behind you are like, what are they doing there?
Okay, so I don't think, I already said, I don't think it's unethical to just put the change in your pocket.
Yeah.
But if you count it and you only ask for your money back if you didn't get enough, and you never offer the money back if you have too much, you are a thief.
Yeah.
Right? You're a thief. So you might just deal with that, right? So you see your friends doing that, be sure and tell them that. I'm not kidding even. You're a thief. You know what's really fun is when people come up to me, I don't go to cocktail parties. Why would anybody go to a cocktail party and drink cheap bourbon that they give you at a cocktail party? And then they mix soda pop with it and shit. You know, it's awful. Instead of just go home and have a really good glass of bourbon by yourself. I don't understand this. But anyway, unless I'm getting paid, I don't go to cocktail parties. So anyway, but you're at a cocktail party and somebody comes up to you when you're a CPA and they'll talk about how they cheat on their taxes. I'm like, what? You're talking to me about how you cheat on your taxes. I don't want anybody to talk to me about how they steal from me. If you don't pay your taxes, I get to pay more. That's the way this works. It's sort of like if you don't pay for product you buy, you stole it, then they add that, or a little bit of it to what I have to pay when I buy stuff. No thanks. I don't like that. Not okay. I don't want to support you. So, you know, don't tell me about it at least. So here's what you tell them. You say, you know, I'm a CPA and I am ethically bound. I took an oath to turn in anybody who I know is cheating on taxes. That's a little white lie. That's not true, right? Okay, that's not
I was about
true.
to say, I don't think you take an oath like a
No, that's not true. We are not police, right? But it's really fun to watch how fast they get away from you. I mean, they'll even go home, right? Leave the party.
Yeah, man, I hate to tell you, but right before they give you your license, you know, you have to swear, solemnly swear to always turn in anything.
Yeah, always turn in everybody. Yeah, that's right. I swore I got to turn you in. What's your name and phone number? Your ID number, please. Yeah, that'd be good. Okay, so because people do indeed steal things, and also, you know, out on the loading dock, you know, the person running the forklifts drives over some packages of goods, you know, destroys some goods. Do they throw them in the dumpster, or do they tell their managers so the inventory records are updated? Actually, if it's a good manager, they tell the manager, because they're not going to get punished for that, right? Unless they do it continuously, right? But, you know, what's human nature? They pick it up and throw it in the dumpster, don't they? And they hide it. So you need to be aware, you know, inventory is going to be short too, right? Not over. Also, have you ever seen anybody go into a convenience store, grab a 6-pack of beer, and then run up to the counter and say, I'm going to steal this and I want your inventory records to be updated. So be sure and record the fact that I stole this, and then run out the door. No, they put it under their jacket and they go on out the door, don't they? Right? Nobody ever reports theft. And a lot of times they don't report damage, loss, whatever. Plus, could you record stuff wrong? You know, it comes in and you don't run it through under the scanner. It goes out, you don't run it through the scanner. I guess you didn't record it as sold, you just gave it to people then. Right, if you failed to scan it, you just gave it to them, you don't add it to the bill and they leave with it, right? They didn't steal it, you gave it to them. They don't realize it. This happens all the time with me. It's amazing how often at the end of a meal, I'll have another glass of wine and my wife will or something, and they don't add it to the bill. And it happens a lot. And they're really busy, they're moving under the table, we're taking our time, and we're chatting with the waiter or whatever, you know. What do we always do? We tell them to be sure and put it on. And then if they say, well, you know, I have so many a day, I can just give you that because it's screwed up. I'm sorry, what do? I add it to a tip, of course. Right? Of course. Just in case they have to make a big one. Right? Which happens in a lot of establishments, right? So be responsible. By the way, don't go out and eat unless you can afford 20% tip. Do not do it. Don't go. You are stealing in our society. I like European model better. You don't tip. You know why?
Because they include it.
Because they make as much money as you do, right? They get a reasonable wage. What do people get here that are waiters? Anybody work as a waiter?
It's like $2.50.
$2 an hour, $2.50 an hour or something. Try living on that. You're supposed to leave tips. If you can't afford the tips, stay home.
Everybody.
And go less often.
They say everybody in Europe loves us because they always.
Oh, I know. You know what I did? I took students to Europe. It's hilarious. So there are really ugly Americans, you guys. They don't mean we're ugly that we look ugly. They mean we're ugly because we behave poorly, right? So in France, France has a reputation for not liking Americans, right? Paris particularly. And it's nonsense. They like us fine, as long as we're not obnoxious. I guess they like us just fine. In fact, they really like us if we're not obnoxious. What I do with students is I tell the ones who are really nice to the waiters and stuff that they didn't need to tip. You know, that you can give them a little bit of a tip if you want, but remember, they're making pretty good money. They're doing fine, right? So you should tip everybody who does anything for you then, I guess, right? And so, you know, I discourage the tipping a little bit. You know, just save your money and be fine. The ones who are really obnoxious, I tell them, you know, you really ought to leave a 20% tip. And they'll say, oh, I thought we didn't have to tip in Paris. Oh, no, I think for this meal, you really need to tip. This restaurant, I think you need to tip. And the waiters just crack up. Because, of course, they're pretending they can't speak English, but they can. They just don't want to speak English to these assholes that I happen to be with, my MBA students, right? So I sold them. I got them really good. When we were in Nicaragua, we'd have guys that would not want to pay their share of the bill and think Bellarmine was going to pay it because they give us one big bill for a whole group of people, right? When you go on trips, you guys pay your way. Or people notice when you don't. They really do. And they hold it against you. Anyway, I wouldn't let them get in the van to go to the next stop until everybody ponied up enough money. I'd say, okay, the bill is $200. It was cheap anyway. It's $200, you know, for 10 people to have all kinds of food and beer and stuff. Yeah, anyway, so, you know, you ate really well for a few bucks each. And I'd say, no, I'm not paying 100 and you guys paying 100. You only put in 100. Until there's another $100 in there, we're not going anywhere. And if it gets dark, the driver and I are going home and you guys are going to spend the night here. Take your pick, right? And we'd be, you know, 100, 150 miles from wherever we were staying. Right? So in a third world country, they didn't really want to consider it. God didn't get anything. Don't do that stuff. Pay your way, right? And don't steal any inventory, okay? You know what? I used to work as a janitor. You know what the biggest thing was that was stolen? Janitors would steal janitorial supplies and take them home. The boss told me, you're kidding. You really take this crap home? Yeah, they steal it. So we have to be careful about that. Don't steal them. Okay. And toilet paper. You know why we have these massive rolls of toilet paper that you can't carry? You know, is because people steal toilet paper. In bathrooms, have you ever noticed it's locked? The little canister thing is locked. Are you kidding me? You lock up that see-through toilet paper, right, that they have in public places? You know why? People steal it. It's unbelievable. Unbelievable.
It's really hard to unlock it even having keys because I'll be like cleaning the bathroom or whatever.
Yeah.
And it's like, come on.
I can't get this in. Yeah. They do the same thing with the paper towels, don't they?
Yeah.
People must steal paper towels or throw them all away. Yeah, okay. Anyway, I wasted a whole bunch of time. Go away.
It's our day.
Oh, it's your day?
Yeah.
Is it really? Oh,
Yeah.
crap. I got to put up with you? All right, but no, you're professional. Yeah, that's good. Is it really? I read it wrong.
Yeah.
Yes, it
Okay,
is.
I thought they had it, and I was trying to figure out why. There's nothing going on in their
It was
class.
their day yesterday.
Okay, good. All right, then let's do perpetual versus periodic. Let's do the journal entries. Anyway, the point is, do you still count? Do you still count it for perpetual? You better, right? So you find out how much you really have. Do you still need to make an adjustment to inventory then? Yeah. Okay. So here's the deal. It's pretty simple. Perpetual has become more and more common. Of course, you want to do perpetual if you can. By the way, people used to do perpetual even before computers. If you were a jeweler, you know, and you got a whole bunch of different diamonds sitting in front of you, how many different values are there? Oh man, everyone's a different value. And really looking at it, you can't hardly tell. You know, what's really high quality, you can't tell how much they weigh unless you weigh them. And, you know, it's the strangest thing. I don't understand diamonds. The perceived value of a rock being, you know, so high. But that industry has done a really good job of convincing people that you are investing in a diamond. You're not investing in a diamond. You might be investing in the person you're marrying, right? But the diamond is not an investment. You are paying probably 4 or 5 times for the diamond what you could sell it for immediately after you buy it. And it will probably never be worth what you paid for it in the course of your lifetime. That's not an investment, you guys. That's an expenditure, right? It's an expense of getting married.
Just like a Honda, so if you drive out the lot.
That's
it's
right.
worth
She
about-
paid 30 grand or whatever for that thing, and it was worth 20 when we drove around the block.
That's right.
Well, maybe a little more, 22, right? We drove around the block, right? But you know what? I don't care. Why? Because it made my wife happy. She doesn't want to drive somebody else's problem. She says she doesn't want to drive their dirt. That's what it is. She doesn't want to have it. Okay, fine. I don't care. Right? It's all right. Doesn't make any difference. If there's perceived value, there's perceived value. Plus, is one other thing. It's like depreciation. I don't care how much it costs. I care whether or not the cost is worth the value you get. We are going to drive that vehicle until hopefully it has 200,000 miles on it. I almost made it in a Volvo, right? Certainly no less than 100,000, right? Now, if I bought a car for $20,000, could I get her to drive it for 200,000 miles? No way in the world. Could I even get 100 out of it? No way in the world. I'd be lucky if I got 50. So per mile, this car might be a lot cheaper for me, right? But either way, I know that I am giving away $30,000 that I am not getting back.
Could have gotten 300 out of that Acura.
What's that?
Could have got 300 out of that Acura.
Theoretically, unless the parking brake breaks, and then it costs you $2,000 or $3,000 to fix it, right? Yeah. So you got to be careful with these things. What's really funny is about $5,000 of the purchase price of that vehicle is for all the technology stuff that is pretty much worthless, but she loves it. Do you care if it makes a beep when you drive outside the lane or not? That make it last longer? Oh, I think it's kind of humorous because she does it too, right? She never knew she did, but now it's telling her every single time. So
Well, even if
we'll
you
turn it off.
If you get on those roads like on Barstown Road, you get those roads where it's just 2 dotted lines on either side. It thinks you're out like constantly.
Yeah, but you can set it so that you have to be going fast before it does it.
Oh, okay. Maybe.
So I'm thinking about setting it for 90 miles an hour. Only when I go at 90, it lets me know I drifted. It might be a good idea if I go at 90. God, I'm wasting time today. I guess that's good. Just waste some of
Start
your
with the
time.
diamonds and then.
It's not my problem to know this stuff. It's not my problem to know this stuff. Anyway, it's yours, right? So be all right. Pretty good. Think thought about that. Okay, good. All right. Anyway, so what would the journal entries be? It's really pretty simple. In perpetual, you keep track of it all the time. So what accounts are you going to be using? Inventory, right? Here I'll have inventory. And what else will I have?
Inventory expense, cost of goods sold.
Not inventory expense. What do you call it? I heard it.
Sold.
Cost of goods sold, yeah. He corrected himself, yeah. Okay, cost of goods sold, we don't have inventory expenses, cost of goods sold.
Okay.
Yeah, that's what we thought. All right, and then in periodic, what you're gonna have, you'll still have an inventory account, but then you're gonna have a purchases account. Okay? And almost always you buy things on account, right? Because you're doing business to business, you're buying your inventory from, right, a business. Even when you sell stuff, if you're selling to another business, it's on account. But If you're selling to the general public, it could be for tax or on account, right? Either way. So yeah. All right. So what would the journal entry be? Let's just say I buy $10,000 worth of inventory. So in each case, what would my entry look like if I buy 10,000 of inventory? Debit what in perpetual? That's what we've been doing so far. What do you do? Oh, let's say, by the way, last year I had 20,000 of inventory. Did I say 10,000?
Yeah, you said.
Yeah, 20 is too much data. Let's make it smaller. Huh. Okay, sure. Let's do this. Let's say I have 3,000 beginning, okay? That's a 3. Okay, 3,000 beginning. And now I buy 10. What would, and I have 3,000 here at the beginning too, by the way. Method would make a difference in how much inventory you have, right? So same company using 2 different methods, okay? All right, I buy 10,000 on account. Debit what? Inventory, 10,000. Credit what if it's on account? Account payable, 10,000. Everybody good?
Yep.
And then what would you do in periodic?
Same thing for inventory.
Not inventory.
Yeah.
Nope.
Oh, purchases.
Purchases, yeah.
You bought.
This is kind of a quasi expense account. It's going to end up being mostly cost of goods sold, but it's my purchases. I'm going to close the cost of goods sold. Right? You already know what closing is, right? Take the balance out and put it in another account. So purchases are going to be 10,000, right? And credit what? Oh.
It'll be inventory.
What?
No, it'd be accounts payable.
Accounts payable. Yeah. I bought it on account. You were doing so well, and that was terrible. Okay, anyway, yeah. Accounts payable, right? Oh, it's just 2 different ways of tracking it. Here, instead of adding it to the inventory, so over here I added it to the inventory, right? So I have 13,000 of inventory. I constantly keep track how much I have, that's all. And here I put it in purchases. I know how much I purchased, but I don't know how much I have, right? That's the
Right,
idea.
so basically periodic, every time you buy something, you never put it in inventory, you just put it in purchases.
You got it. That's it.
Okay.
That's the big difference. It's not a big deal, okay? Then what happens when I sell something? Let's say that I sell 8,000 of this inventory, okay? I say sell 8,000 of it for $12,000 on account. Give me the journal entry that you'd use. What do we do over here when we sold it?
Credit or debit inventory.
Debit.
Debit inventory?
No, or
No,
credit.
Credit.
Credit inventory, yeah, because they gave up the inventory. Credit inventory, because they gave up the inventory, didn't they?
Yeah.
The customer walked away with it. I gave it up. Okay, so I credit inventory for the 8,000. Everybody agree with that?
Yep. Then would you debit cost of goods sold?
Yeah, debit cost of goods sold for the 8,000. Absolutely. So I have 8,000 coming out of here. So obviously, if I had started with 3, I bought 10, and I sold 8, I'd have 5 left, right?
Yep.
Everybody agree? So I have 5,000 in here. Absolutely. Okay.
And you said you sold.
And cost of goods sold is 8. And yeah, I said I sold it for 12. And cost of goods sold would start with what, by the way? You start the year.
0.
0 because it's expense account, right? Purchases is an expense account. What would it start at? 0. Everybody got it? So each of those would start at 0. Say that too, I guess. Okay. All right, good. And then, what do you want to do with the sale part?
The 4,000 would be revenue.
Only 4,000 revenue? I thought you sold it for 12. Your expense is 8. What's your revenue? What'd you sell it for?
Oh.
12. 12 revenue, 8 expense. What's the gross profit? 4. This is a real common mistake. Students want to show a gain on selling their inventory. This is the ordinary course of business. What do we do in the ordinary course of business? We record all our revenues, we record all our expenses, and the difference is income, right? What do you do when you sell peripheral or incidental things? You read about it in chapter 5. What's that? Those are gains and losses. There are no revenues and expenses. You just get rid of the asset or get rid of the debt, maybe 2, and you have a gain or loss on that transaction. Okay? So, what do you want to do? Record a sale. How much? 12,000 we sold it for. Debit or credit? Credit, because it's revenue, right? Sales. 12,000. What do you want to debit? I said on account. What is it?
Accounts receivable.
Accounts receivable. If it's for cash, it'd be cash, of course. And then later when we collect, we'll debit cash and credit accounts receivable, right guys? Okay, what would I do over here? This is the big difference. So one of the differences, you're absolutely right, is I go to purchases here and I go to inventory here when I buy it, right? What's the next big difference? I do not record cost of goods sold. There is none, okay? No entry for the cost of goods sold. I'm not keeping track of the cost of goods sold as I go. Okay? So that corn that's in a big pile in my field, you got the idea? Okay? I know how much corn I start with, I know how much corn I end up with, and I know how much corn I purchase. I'm going to compute my cost of goods sold. Got it? That's it. Okay? And just fall out for me. By the way, what's going to be included in my cost of goods sold then? All the stuff that was stolen, damaged, lost, errors. So which is better controlled, perpetual or periodic? Perpetual, by far. Which is more expensive? Perpetual. But as computers have gotten cheaper and cheaper, right, relative to everything else, gotten much cheaper. And certain storage spaces in a computer has really gotten expensive. You know, a computer like the one in my pocket, this thing, when they first came out with computers, this has far more, right, storage in my pocket than the first computers that came out, first generation computers, which cost millions, right? So, okay, so imagine what a laptop does. Although it's as good as a lot of laptops that have. Okay. I don't know. I think it's only 32 or 64 or something. It's enough for your pocket, probably. I think all of these are giving us cancer. And we're going to find out, you know.
I mean,
we hold it up here, put radio waves to our head, and we're all going to die.
or it's sitting in your pocket all day. You know, that kind of deal.
So I'll never be able to father children again. That part's all
I
right.
think that
I
ship sailed.
I'll be ship gone anyway.
Yeah.
That ship's on the horizon.
Yeah, that might be gone.
Sit down to Titanic.
I don't know. There are guys that, yeah, you know.
Can we,
What is it? What is it? Viagra? You know.
can we please just finish that? Number 3.
This guy. I can't remember where I was now, but this old guy walked up to me, and I was already real gray and white and everything. I hadn't been for years. And so he's explaining to me how Viagra can really improve your life.
Oh,
And I'm just, holy cow, you know, so this is the future, you know, you hang out with old folks. Yeah. Oh, yeah, wonderful stuff. Oh, yeah, that's great. Yeah. Anyway, insurance companies will actually pay for that, just not birth control, right? Yeah, okay, that makes sense. Okay, anyway, so, all right. We want to encourage procreation or something. So you don't make a journal entry for the cost of goods sold, you still make a journal entry for the sale. Well, it'd be kind of a good idea, right? You got to record the sale. So that's it. Big deal. All right, then what you do at the end of the period game is what?
See how much you have left.
Yeah.
Count and see how much you have left. What are you going to do here? Count and see how much you have left. What are you going to do here? Count and see how much you have left. And you're going to see, is that 5,000 or not, right? Here you don't know how much it is. Got the idea? Okay, here you're going to just count, and whatever it is, it is. Okay, so let's say you count and there is 5,000. Let's get rid of this. And let's see if we can actually do something. Come on. Oh, there it is. Go to the side. That was pretty good. It didn't take a week.
You're getting better.
Yeah. Time the summer's over, it'll be pretty good. Do not forget before school starts. Okay, so what you would do is you'd count the inventory, wouldn't you? Okay? And you'd adjust from where you are to where you should be. Let's say I count 5,000. I count exactly 5,000. So in other words, my system was perfect. Good luck, but it was. Let's say it's perfect. So I go count 5,000. Do I need an inventory adjustment if I have 5,000 in the account and I want it to be 5,000? No. But what am I going to have to do here? I have to adjust it from 3,000 up to 5, don't I? That's it. Okay, and there's a couple ways we could do that. So assuming the count is 5,000, let's look at what that entry would need to be. Okay, so again, here's what I've got. For perpetual, and for periodic, I've got this. I want to do cost of goods sold. How do you calculate the cost of goods sold? Now this would go on your income statement. You'd show sales less cost of goods sold is gross profit, right? Okay. How do you get your cost of goods sold? What do you start with?
How much you had to begin with.
Yeah, beginning inventory. You know what? Do that in both cases. Sound good to you? Okay, how much was beginning inventory in both cases?
3,000.
3,000, 3,000. Yeah, it is no different. So this would be your statement where you do it, okay? You could do a separate cost of goods sold schedule, or you could make it part of your income statement, okay? Either way. All right, then what? What are you gonna add to it? How about purchases? You know what you start with plus what you buy is what you have. We're pretty clever that way. It's called available for sale. What I start with, beginning inventory, plus my purchases, is my available for sale. Sound good? That's available. Okay. What do you bet it's the same thing here? Okay, how much did I purchase? Now here, I'm gonna have to go get my purchases out of inventory, but so what? I know it's 10,000, right? I'm about 10,000, I know what I purchased. So I know I have 13,000 available. Here, maybe it's a little more convenient, it's in the purchases account. Of course, you wouldn't just have one purchase, you'd have lots of them, right? Okay, in either case. So I got that 13,000 available, don't I? Everybody good? And then what I'm gonna wanna do is I'm gonna wanna subtract the ending inventory in either case, which is what, 5,000?
Yep.
And that's gonna give me my cost of goods sold, okay? All right, same thing here. This is ridiculous. It's the same thing, isn't it?
I think it's 8,000.
What did I put? I mean,
Oh, no,
5,000.
no, it's 5 is the ending.
Cost of goods sold, yeah. 8,000. Is that right?
If you don't
Yeah.
make, for the period, if you don't make a journal entry for what is taken out, then how do you know that your ending is 5,000?
Because I counted it. I went and counted it and found 5,000.
You took inventory.
I took the physical inventory. In
Yeah.
either case, I'm gonna take the physical inventory. And what we're supposing here is the improbable, right? That we have exactly 5,000. We thought we'd have 5,000 and we do have 5,000. Really, you'll probably have something less than that. We'll do that in a second, okay? So if I go count it as 5,000, I know I want this inventory to be 5,000, I want that inventory to be 5,000 because it's 5,000. And either way, I get the same cost of goods sold. How does that work? Where is my cost of goods sold here? Well, first what we're gonna have to do is we're gonna have to make a journal entry to get from here to here. And what I said was there's a couple of ways you could do that in the periodic. Okay, so continuing on with periodic here, what you could do is you could, what do we need to do? Debit inventory for 2? We could debit inventory for 2,000, and we could credit income summary for 2,000. And then what are you going to do with the income summary later? Close it to retained earnings. Okay, so where is that 2,000 that's in income summary? Okay, first on the perpetual side, this $8,000 right here is that $8,000, and we're just fine, aren't we? Right? And the rest of it is the beginning inventory plus the purchases less the cost of goods sold is the ending inventory. And we put the ending inventory on the balance sheet, don't we? You guys good with that? So, you know, this $8,000 is an expense account. And the rest of it is balance sheet stuff, really. Okay, you got it? Over here, this, we just adjusted our inventory up to 5,000, didn't we? So it's there, right? Where does the 8,000 come from? This is not an account. This is the account, isn't it? It's 10. How do we get 10 down to 8? We have this income summary credit for 2, don't we? See it? 10 less 2 is obviously the 8 cost of goods sold. What happens is the change in inventory here increases or decreases cost of goods sold. Well, think about that. If I have more inventory at the end of the year than I do at the beginning of the year, I sold less than I bought. I added some to inventory. I bought 10, but I added 2 of it to inventory, so I only sold 8. Well, yeah. What if my inventory goes down? What if it went down from 3 to say 2? You must have sold more than you bought. So I'd have 8 plus the 1 decline in inventory. And then what you'd have is a credit to inventory for 1 and a debit to income summary for 1, wouldn't you? Got it? It works the same either way then, right? Everybody good? See it? You get the same point. Now you don't have to do it this way. What you could do is instead, and I think this is what the author does, and I personally think it's kind of silly. I think that's good enough. Where's that income summary going to anyway? Retained earnings. What you could say is, well, I think I sold all that beginning inventory. Well, that's fine. Debit income summary, because it's going to cost of goods sold, right? And credit inventory. What would that do if you do that? So there's the beginning inventory, right?
That's what you would do with FIFO.
No, it doesn't matter. FIFO, LIFO, any of it. Doesn't make any difference. You can do it this way if you want. Okay? You're just valuing your inventory different if you use FIFO versus LIFO. The amount of the inventory at the end would be different, but the entries would stay the same. Okay? All right, but you know, if I do that, that makes the inventory 0. What do I have to do now to get it up to 5,000? Debit it for 5,000. I think this is a waste of time. This is how the author shows it. It's just fine. Don't write them an email and say, thanks, you're wasting time. Okay, it's fine. Lots of people do it that way. But isn't those two combined just that? What they're saying is, okay, I add the beginning inventory to cost of goods sold, right? Which is true. And then I subtract the ending inventory from cost of goods sold, which is true. Okay, fine. The difference between the debit of 3,000 and the credit of 5,000, the income summary, is a credit of 2. When I learned this stuff, we called it inventory variation or inventory change. And guess what we did with that? Close to the income summary and then to retained earnings, right? Didn't make any difference. Okay? So the key thing we want to get is we want the same information on the income statement. That makes sense? Not a big deal. Okay? All right. In real life, you won't get the 5,000, will you? Let's say we go out and count it and we get 49,000. Okay? I count that inventory, and when I do the count,
I mean,
4,900.
Oh, 4,900.
Yeah, if we had 44 more, I'd be really
Oh, I guess,
concerned.
well, then we think God, you know, loves us and sent us stuff. Yeah, okay, yeah. I guess I thought it was 50. All right, so, well, let's make it 4,000 so it's even. Okay, 4,000 bucks. Boy, that's awful. We should have 5,000, 1,000 got stolen. Okay, anyway, so, you know, but here's the deal. Over here, we're going to know what stolen are. Over here, what are we going to think? We sold it, I guess. We can't separate theft from sold or damage from stolen. Got the idea?
Yeah.
So again, better internal control with professional, right? Okay, try it this way. So now I think I should have 5,000. Okay, here what I have is, it's not going to be 5 anymore, is it? What's it going to be? 4. So this is going to be 4. Okay, and I'm just going to adjust to it, aren't I? Everybody agree? What about over here? I think I should have 5, and I realize, oh no, I only have 4. All right, and now I'm thinking, oh no, this is not good. We lost 1,000 of inventory. I have to do something, so I'll have to make an entry over here for it. Okay. So what would it be if I'm doing the periodic side? How will these entries change, guys? Figure that out.
just think you sold it.
Come on. What would you think you'd done?
You would just think you sold 1,000 more.
Yeah. So this would be, what number would I have there? How come it's erasing in a whole bunch of places at once? Don't do that. I didn't have my hand up there. All right, so available is 13 still, of course. Ending inventory now is 4,000, isn't it?
Yeah.
So I think it is. How much did I sell? 9,000. So what's my cost of goods sold going to be? 9, and how will I get there? What will this entry have to be?
3,000, yeah.
Guess I should have changed the 3 to move that along there. All right. So I want my ending inventory to be,
What would be?
4 when it was 3, so what do we do to inventory? Increase it by just 1, because summary gets a credit of 1, and what I've got is what? 10,000 purchases, less the 1 increase in inventory is 9,000 cost of goods sold. Everybody good? Okay. Over here, I take out the 3, right? Still getting rid of the beginning inventory if I decide to do it that way. And then I'd have to put in the 4 at the end, right? And it'd have exactly the same impact, wouldn't it?
Yep.
Okay, everybody good? See. All right, so what would I do over here? Trying to hide from you. See that?
You just change the ending inventory to 4,000.
I'm gonna, but I know that it was supposed to be 5.
So would you, how do you account for the damage / stolen / loss?
Yeah.
Allowance for damaged goods.
Allowance for damage, yeah.
That's about all I got.
No, you could, that's not bad. It's not bad. There are methods somewhat similar to that, actually. Yeah, so, but what do we probably do here? Because you can't have allowance for writing down your inventory. Do that stuff later. But either I can say, okay, I've only got 4,000, so I can just go ahead and adjust my ending inventory to 4. So I can do that. And if I do that, what'll happen? It'll make my cost of goods sold
go to 9.
9 instead of, yeah. I'd make it 9. We can do that if we want, okay? And then we end up with exactly the same thing. That's if I think that $1,000 is pretty immaterial. Okay, my cost of goods sold really is probably 8 and 1,000 is stolen, right? Or lost, damage to something, right? Unlocated. So do I have 9,000 in cost of goods sold, or do I have 8,000 in cost of goods sold and 1,000 loss on damaged or stolen inventory? Yeah, and if it's immaterial, let's say it was $100. Who cares? Put it in cost of goods sold. Materiality, right? It's not going to make any difference to a decision maker. What materiality is, something is material if it would change the decisions made by a rational decision maker using their financial statements. So do you care? Well, geez, if it's 10%, right? It's a quarter of the inventory is gone that we're supposed, or 1/5 of the inventory is gone that we're supposed to have, right? Because we're supposed to have 5, it's only 4. That's big. Because 20% of your inventory disappeared, right? Make it millions, right? Now this is big, okay? Scale it to the size of the company, right? So that's a pretty big number. And also your cost of goods sold is supposed to be 8, and now it's 9. It's pretty big, isn't it? We got 1,000 lost here, so I think it's probably pretty material. So probably what I would do is I'd leave this at 3,000. It really wants to be bigger. 10,000, 13,000, and I'd make this 5, wouldn't I? And my cost of goods sold would be how much? 8,000. But what kind of a journal entry would I need? I need a journal entry now. Notice we didn't make any journal entries on perpetual. If it came up perfect, we need one now, don't we? What do we need to do? I need inventory to be what? In fact, I need one here. I need 1,000 out of here, right, guys? If I'm going to take 1,000 out of here, I would have to do what? Credit inventory for 1,000. So here's one way. Credit inventory for 1,000. And debit cost of goods sold for 1,000. So that's what we've done here so far. That makes sense? We just made it 9. So now I've got 9 in cost of goods sold. I put another 1,000 in cost of goods sold here, and obviously it's 9, isn't it? That's how you get there. Everybody good?
Yep.
That'd be fine. Okay, that's if it's immaterial. If, however, I think it's material, what would I need to do? I'm going to debit loss on, I don't know, stolen inventory or something, whatever it is, if I can figure what it is. Decipher what it is. That's part of the job, right? And then credit what? Inventory. And either way, I get my inventory down. So, right, I still have my credit to inventory, but instead of going to cost of goods sold, what am I doing? I'm going to go to a loss account of some kind. Okay? For the 1,000. Okay, now where is that loss going to go? not under cost of goods sold, right? This stuff is all gonna be up under operations, right, guys? You know, sales less cost of goods sold is gross profit, less operating expenses, right? You got it? Okay, so down under non-operating, so in my non-operating section, I would have this loss of 1,000. In the non-operating section down at the bottom, the other revenues and expenses down at the bottom. So that little bit that you got in chapter 5 is gonna explode, okay? It's gonna be a big area. We're gonna put a lot of stuff down there, okay? And then below that's discontinued operations, right? But gains and losses, unusual and infrequent things, or both now, right? No such thing as extraordinary anymore, right? Okay, that's down in there. All right, so this non-operating loss will be 1,000. So what happens is we have 9,000 of cost of goods sold here. Here we have 8 of cost of goods sold and 1,000 loss. Of course, our netting is still the same, right? But then you convey to people, look, 1,000 of inventory sold, right? So that's,
We're good.
it's meaningful. What's that?
Or damaged.
Or damaged or something. Maybe just unlocated. And if so, I wouldn't be happy.
It's a lot.
You lost a quarter of your inventory, you don't know where it went. Really?
That's like, you just have like.
Anybody running the store? Yeah, no.
So that's like you had a big Apple warehouse full of phones and a quarter of it just like disappeared.
Uh-huh.
Got crushed.
Yeah,
It's a lot.
you know, or a bourbon warehouse.
That's right.
A fourth of the bourbon is gone.
You would probably eat.
I believe we can
Crap.
know by the
Oh,
point
my.
figures.
Yeah. Well, you saw that big bourbon heist that we had here, right? The really old stuff that those guys stole.
That Happy
You seen that in the
stuff.
press, that Happy Van Winkle?
Yeah, that's out. That was over where I live actually.
Yeah, they haven't, they still haven't found all of it, but they found some of it. If people are actually trying to sell it, nobody will touch it. Because everybody knows it's stolen.
Wow.
Yeah, so people stole a whole bunch of stuff for us. It's like when they steal, and this stuff's real value. And it's, you know, collectors and stuff. I just can't see it. It's like, I don't know about you guys, but I can I can see spending $20 for to take home a good bottle of wine, right? $20. And in a restaurant, that would be 40 or so. But 200, you know, to take home or, you know, and then, you know, double that in a restaurant. Are you kidding me? You know, it's so many ounces of liquid. How rich do you have to be, I guess?
Yeah,
If
if
you're rich
you
enough,
got money to blow, who cares?
it has to be immaterial to your wealth, I think, is what it is, right? So yeah, I'll pay $12 for a glass of bourbon sometimes, you know, and $50 for a bottle of bourbon. You don't have to pay that much to have good bourbon, and I pay that much, you know, for better a little bit. But I don't spend $1,000 for Pappy Van Winkle, no. It's certainly not $200 for a glass. I mean, my God, people are insane. So
Yeah, there was some way. Because I live in Bardstown, there was some way the principal at Bardstown High School was connected to that.
yeah, they all knew each other,
Yeah.
and they devised this plan
Yeah.
to steal it. And their plan to steal it apparently was pretty good because nobody caught them for a long time, right? But they had no plan to dispose of it once they stole it.
Right.
Or they drink it themselves, I guess. That's what they'd end up with, you know. So still, artwork's the same way. You steal artwork, what are you gonna do with it?
Clean your face and
Yeah.
clean it up, I guess.
That's the interview I was mentioning the diamonds, that people buy diamonds, just think they're making investments. And of course, it's never worth what you paid for it, almost never. I mean, there are diamond dealers, by the way, that do invest in diamonds. But they pay what it's worth and hope for it to appreciate, and then they sell it for what it's worth then. They don't pay 5 times what it's worth or 4 times what it's worth or something, you know, that you would at retail. And art's apparently the same way. This is really interesting, it's on NPR. And you know, artists are supported by benefactors who buy their art, right? And then, so they buy it cheap. And then when they get famous, the art becomes real valuable, or if they don't get famous, oh well, it never becomes valuable. But the person likes it, you know, maybe when they die, yeah, maybe. But so the artists are pissed, so they want to make money off it. So what they're doing is they make similar ones, and then they sell it themselves for a lot of money. It's screwing up the art community because the dealers don't have anything to sell now. And what is even worse is people are collecting it to make money off of it, and they think it's an investment. And they're flooding the market with art that already is appreciated. So new artists can't get benefactors to buy their art because it's not already valuable. So the whole market is collapsing, apparently. It's really interesting. It's relatively few people, right? These art dealers, art brokers helping young artists that are real talented, supposedly, right? I don't know art, you know, get established and get funding. And the funding's drying up. So the young artists are gonna go back to being starving artists again, I guess, you know, literally, yeah.
Like a never-ending cycle.
What's that?
It's a never-ending cycle.
Yeah, never ends up doing that. So they were pointing out that art is just an absolutely atrocious investment. The way to make money with art is to buy it, keep it for your entire lifetime and die. And then have your heirs keep it for their entire lifetime and die. And then they keep it for their entire lifetime and die. And sometimes it becomes infinitely valuable. And your heirs someday might get a whole big profit out of it. But people buy it and don't sell it. But the people who were buying it didn't want to sell it. They wanted to have it. That's different. Well, now it's changed. And I would say the diamonds are the same way. You buy them because you want to have them. I'd say a house is the same way. You guys ever buy $1 million house? It's because you want to have it. It's not because you're going to make money on it. You know how much houses appreciate on average around the country every year? 2% more than inflation. 2%. Do you know what the stock market does every year? 5, 6, 7, 8% more than inflation. 5 to 8% more than inflation on average across our lifetime. You want 2% or maybe 6 or 7?
I guess you gotta live in it anyway.
You don't live in all of it. It's $1 million one.
That's true.
You could have had a $250,000 one, right? Perfectly fine.
Unless you
And
buy
then you could have taken the $750,000 invested in the stock market. Sometime we'll work out what the difference is in your wealth at the end of your life if you do that,
Unless
or when you
you're like
retire.
flush with cash, when those market falls, you buy the property and then you flip it.
Well, flipping it means you have to fix it to sell it.
Yeah.
That's not just buying it, waiting for it to appreciate and sell it.
Yeah.
An investment, you just buy it, wait for it to appreciate. Flipping it means you spend a whole bunch of energy and a whole bunch of time, and you take a whole bunch of risk that it will or will not increase in value. So you buy the house for a couple $100,000, you put 500,000 in it, and now you try to sell it for $1 million. That's flipping it. What if it's only worth 300,000 after you put your $500,000 in? Now you lose your shirt.
That's
After you did a year's work or 2 years' work building.
Yeah.
So it's risky business. It's all right. If you are a really talented builder, it's a good way to make money buying properties that are distressed and in a horrible shape, and you fix them and sell them. Right? What happens if you can't sell it? You rent it until you can sell it. What happens while you're renting it? The renters destroy it. Then what do you get to do before you sell it? Fix it again. Yeah, but maybe you break even in the meantime.
Yeah.
And pay your payments on it because you bought it for almost nothing, right? Although you already have this investment in it that you had to borrow that money. So business is not, you know, you look at it and you think they must be making a lot of money. I never think somebody's making money because they look prosperous. That doesn't mean you're making money. That means you buy nice clothes. You might be even more in debt. Is Donald Trump extremely wealthy? I don't know. Nobody knows. He says he is. Nobody really knows. He may have more debt than he has assets. I wouldn't be at all surprised. Does that make you wealthy? No, no one accountant knows. He makes sure they don't, right? Is that wealthy? I think Warren Buffett's wealthy. Because we know how much Warren Buffett owns in stock, and we know he owes almost nothing. His businesses do, but he doesn't personally. Warren Buffett's one of the richest guys in the world. What's that?
You mean like some like 7 in Omaha, they're millionaires because they bought his stock.
Yeah.
Like he was starting off.
Yeah.
So just
Yeah. Go away, you guys. This is probably good stuff. That was a good suggestion. I like that. You actually asked to work on something specific. Good for you. I like that. We will do those inventory methods next time. Study them, you guys. Study them. Get caught up in your reading, because I know you're not. I'm shocked too. It's never happened before.
I'm sure.
First time ever. My entire teaching career. Able to keep up.
That's part of the whole movie.
All right.
Or whatever it was.
Yes, sir. Oh, I don't have a book. I lied to you. I have a managerial account. Keep it, buy one. Go online. I bet you get a really cheap.
All right.
Don't get the new edition. Get this old one.
All right.
It's just fine. Close enough.
I was just gonna say I don't think I'm gonna take the intermediate quiz today, but can I have it just so it's over?
Yeah. Sure. Where is that? Oh, there. No.
Must be behind this or something.
Oh, did I have to that? There we go. Stop. Stop.
Try using your finger.
Now I have to get to the mouse.
But it's, yeah,
Come on.